All right, joining us now with more on the Fed and the fixed income market, let's bring in Priya Misra. She's fixed income portfolio manager at JPMorgan Asset Management. Another 25. We're on the right track?
Yes, and I think a few more. We heard from Chair Powell, monetary policy is restrictive. If it's restrictive right now, it's restrictive with another 25 basis points. I mean, any policy mix that we're going to get from the new administration, we're only really going to hear about that late next year. So I think the Fed is on a steady path. As they get closer to that neutral rate, I think they can slow down. So it could be 25 a quarter. But I think there's still a lot more rate cuts that I
Is the neutral rate changed, given that ever since the Fed did the jumbo cut, all we've seen is the long end tick higher, the 10-year?
So I don't think it's the neutral rate, it's the fear around the deficit. And, let's be clear, the deficit is on an unsustainable track. I don't think the level of debt is an issue. There's a lot of demand. There's a lot of money that's sitting on the sidelines. As the Fed cuts interest rates, those money market yields go down. That money is coming into fixed income. I think makes a lot of sense. You ask about that neutral rate. I think if we get the policy mix, and let's see what, do we get more tariffs? Do we get deregulation? I do think deregulation can raise our star. This is stuff we're going to look at the data, and I think the Fed doesn't know where that neutral rate is. I'm in the 3.5% camp. I think the Fed is a little lower than that. We're at 4.5%. So there's still a lot of room till we figure out what that neutral rate is. We have to look at the economy. I would say the labor market is slowing. It's still normalizing. And that's sort of allowing the Fed to cut, maintain the soft landing. And then we have to look at the entire policy mix. But the one point I'll highlight, a lot of us are looking at 2016. The inflation backdrop is so different today. The debt backdrop is very different. You have Elon Musk that's going to try and set up Doge or whatever, try and get, spending cuts or efficiencies. I think even President Trump knows that he doesn't have a blank check from the bond market. The bond market, you talk about this move, a lot of this move is the bond market saying, not so fast, we're not writing you a blank check. And I think the administration is going to understand that and try and find some pay-fors as they sort of think about tax cuts.
The Fed doesn't seem to really have a very good, record or ability to look forward. So now the election, all the things that they're doing were based on things that have already happened. Should they be doing anything differently based on the proposed policies of what a Trump administration looks like? Suddenly it seems like all bets are off for what they've been
right, and I think Chair Powell was asked a lot about that. I am sure they're doing scenario analysis. But look at everything that's being talked about, right? From deregulation, tariffs, trade negotiation, taxes. Do we get fiscal stimulus or do we just get a redistribution? Does it come out of efficiency? Do you just extend the tax cuts or do you actually get more tax cuts? I think it is so uncertain that for the Fed, I think everyone talks about them being data dependent. They're really outlook dependent. Did their outlook change? I don't think so. Now, did the distribution of outcomes become a lot wider? Yes, and I'm sure they're going to analyze it. But as Chair Powell said, they're going to look at what are the policy proposals, what's actually making its way. Are the tariffs going through as proposed, or is that a negotiating tool? I think we don't know. And as they think about inflation growth, they've got the dual mandate. I think we'll be hearing a lot more from them as we know what's the number one priority and what actually is taking shape.
Right.